Hi everyone, Teresa Aker here from Success Diaries with Teresa Aker. I'm thrilled today to bring Chris Picciurro here to you. Hi Chris, how you doing?
It is my pleasure to be here, Teresa. How are you doing today?
Oh, I'm excited you're here. We're going to record this show and bring it out to everybody at the perfect time because you're all about taxes. So I just want to do a quick bio about you, okay, Chris?
Okay, wonderful.
So yeah, Chris Picciurro is a personal financial specialist and co-host of the Teaching Tax Flow and Mr. R Show podcast. So we're going to make sure that all of that is put into your bio, which I will write out. But I'd like to get started because we're all going into tax time, and you're the right person to have on the show, Chris. So let's
Well,
start there.
thank you. Yeah, and so I've been a CPA or certified public accountant for well over 20 years, and started my career right by you. Fun fact, you probably know this, Teresa, but the only border where Canada's north of the United States, in the continue, in not including Alaska, is Windsor and Detroit. So,
It
but
certainly
yeah,
is. And Windsor
yeah.
and Detroit, great areas. And I know we were just talking about that.
Hmm.
I'm out Ontario, so
Hmm.
east of Toronto, and you're the other way, west of Toronto. You were out that way.
I was my family or my wife and I relocated to Franklin, Tennessee, which is 15 miles south of Nashville,
Oh, nice.
about 9 years ago to raise our families. Or to raise our family. But yeah, I spent many, many years in Detroit. Still have family, friends, clients, coworkers there. And one of the things that I'm passionate about as a CPA ultimately what we're trying to do is legally and ethically reduce the tax someone pays in their lifetime. So tax preparation is important. We call it tax compliance season. But on top of that, being very proactive in your tax planning is even more important, in my opinion. And that's why we invented something called Teaching Tax Flow, which is our community for tax planning and strategy. It complements tax preparation. And one of the, so we're in the beginning of the year, the first quarter of the year, both in the States and in Canada, is the peak season for tax compliance or tax preparation. But ultimately, a tax return is a collection of all the financial decisions you made from the year before. Now, there are some decisions you can make into 2025, for instance, and count them still for 2024. But 99% of your tax return is based on what has already transpired. So one of the things we want to think about when we're doing tax planning and strategy and being successful with our finances, pretty much, especially in Canada, the largest bill most people pay is tax. When you think about employment tax or even sales tax or property tax, it all really adds up. And then for that reason, I'm passionate about empowering people through education to take control of their tax. We say either you're going to pick your tax or the government's going to pick your tax if you don't do any planning. So it's up to you. If you don't do anything, the government's going to pick your tax because you're just going to have to submit the documents to them and they calculate it. But if you do the proper planning, then you're picking your own tax. And yeah, so our community is made up of taxpayers, and it's made up of tax professionals and what I call implementation partners. That might be financial advisors, bankers, lenders, in taxpayers, and we all come together to, again, legally and ethically reduce that tax you pay in your lifetime. Um, but that's a daunting task, right? Because there really aren't a lot of resources for tax planning and strategy. A lot of it is around tax preparation. So to make it a little less daunting, I thought, okay, well, what can we do to make kind of the laws? Every good company has culture, and that culture, there's certain rules that are some are written and some are unwritten about that make up the company culture. So for tax planning and strategy, we made up 3 laws of tax planning, and one of them is that the tax agencies are your involuntary business partner. And you know what? That goes for any country. It could be the Canadian Revenue Agency. It could be the Fed Internal Revenue Service. It could be a provincial tax. It could be a state tax, local tax. Ultimately, at least especially in the States, tax laws are written to encourage and discourage certain behavior. And a lot of that behavior is social. A lot of that behavior is financial. So in the States, you can in general, if you contribute money towards your retirement plan, you get to take that income off of your tax bill, in the current year. Now you're gonna have to pay tax on that in the future. So
Yeah.
we're in the States, we have an aging population like many places. And in some of there's something called the Secure 2.0 Act that just got enacted in the last few years that made it easier for people to put more money into their retirement accounts. So that's just one little example of
Oh.
tax laws written to encourage and discourage certain behavior.
Excellent.
Yep.
Chris, that's a huge one. I wanted to touch base on people who are facing retirement. They really
Mhm.
have it's an amazing thing. It kind of catches up on you, doesn't it? It's just all of a sudden, one day you don't have to worry about it. The next day you're thinking, oh boy, did I put enough away? Did I plan enough? I mean, and anything can happen, right? We can have health issues, financial issues, the economy could change on us, you may not have a job, whatever it is, without scaring anyone. But I mean, you
Right.
do have to start planning relatively early, do you not?
Absolutely. Planning is important in what we talk about in teaching tax flow is that we have a process for making sure that your what we call your prescription matches your diagnosis. So for instance, I'll give you an example, Teresa. If someone is younger and they're just getting started, and let's say they're a teacher and they're making they're making some wages, but teachers unfortunately aren't paid enough. So they don't pay a high tax percentage wise. So their marginal tax rate, meaning for every dollar that they earn, how much they have to share with their business partner or the government, isn't as much as someone in a higher revenue bracket. So for that person, they do want to contribute to their retirement, but here in the States, that person might want to do something called a Roth IRA, meaning you're putting the money in today that you're not getting a deduction today, but the money is growing tax free for the future. So you nailed it. There are so many unknowns when it comes to retirement. um, I would argue now that one of the major issues we're seeing here in the States is that not that people aren't covered for long-term care because people are living longer, and they want to maintain a dignity. They want to maintain a certain lifestyle. It doesn't have to be extravagant, but they might need someone to help them out. So there's a gap there between what they have, what the resources they have. Have they purchased long-term care insurance and that sort of thing? So yeah, really the proper planning, and it's a team sport, right? It's not, like you mentioned, a financial advisor is important, a tax professional is important,
Yeah.
a life and disability professional is important, a banker is important. These are all people in teaching tax flow, we call on your personal board of directors. And you want to make sure you have those people in place.
I
And I
like
know you've
that.
had some
Personal board
amazing
of
guests.
directors. Love that. Because what
Mhm,
you're doing is taking control and saying, I'm in charge. I have
mhm.
people that are professionals in front of me. If I need an answer, that's where they are. Is that not a great analogy? Well done, Chris.
Yes. Well, thank you. Thank you. So, yeah, so that's one of the three laws of teaching tax flow. That the other one, and you kind of pointed out, was that we are in that prime time for tax preparation or tax compliance. I don't love that term tax season because I feel one of the three laws of teaching tax flow is that your tax return is a verb and not a noun. So if you think
Okay.
about it like that, oh, yeah, my tax return's a living, breathing thing. So if I make an investment in something, if I sell maybe a stock or mutual fund, if I sell my primary residence, if I buy a primary residence, if I, we're going to touch on, business owners, if I rent an office, if I have a home office, if I buy a new vehicle, if I pay my spouse, if I pay my children, if I take money out of retirement, the point is your tax return is a verb, not a noun. A noun means it's a person, place, or thing, right? I wasn't that good at English, Teresa. I was much better at math, but I do know a noun is a person, place, or thing.
Okay.
And in a tax, that's what a tax return is. But a tax, if you don't do anything, but if you're doing tax planning and strategy, you're thinking about the decisions you're making as something active, being proactive versus reactive. Your tax return is a verb, not a noun. That's what we talk to people in our community about, and really teach to say, okay, I want to be proactive with my decisions, and I want to make sure, I've worked with just for about a decade. I was involved with a team of people that we really helped Canadians that bought investment property in the United States, real estate. And there's a lot of nuances to that because the way the Canadian Revenue Agency looks at LLCs, is different than how the federal government here looks at LLCs. And without the right planning, an investor could easily be subject to double tax, even though the Canadian government and the US government have a very, very friendly tax treaty to avoid that double taxation. That's just one example. So without the right planning, you could maybe be doing things for the right reasons, but you get the bad result. So
okay. So that's number 2.
that's 2. Yeah, your tax return is a verb, not a noun. The third thing is, and
Number
this is
3.
yes, so we work with a lot of business owners, a lot of real estate investors, but I think this goes for everyone. We understand the concept of cash flow, right? I have a certain amount of money that comes in, and I have a certain amount of money that goes out. That's my cash flow. But one thing to understand is cash flow and tax flow. You might be, tax flow, what's this term? But cash flow and tax flow are different. What's tax flow? Tax flow is the tax burden or benefit of any of your financial decisions. So I'll give you an example, like in the States or even in Canada. Let's say you bought a stock for $100. Let's say that stock went up to $200. No, let's say $300. Let's make it easier. $300, and you
Sure.
sold it. You now have $300 in your account, but only $200 is taxable. So that's the difference between cash flow wise, I'm a plus $300 now, but taxable wise, I'm paying tax on $200. And on top of that, depending on how long you own the stock, there are different tax rates for different holding periods here in the States. We have
Right.
long-term and short-term capital gains. So the point is, understanding the tax impact of your financial decisions is important, and understanding that, it plays a role even in estate planning and all sorts of different things. That just because money hits your bank account doesn't mean it's taxable. One more example of tax flow versus cash flow, because I'm trying to keep it really basic. So let's say, by the grace of God, someone knocked on my door. Now, when I was a kid, Teresa, you know what you would do? You would knock on people's doors and say, hey, do you want to play? Now, if someone knocks on your door, you never answer. You look at your Ring doorbell and figure out what they're trying to sell you. It's pretty sad.
True.
Or if you're like my wife, you're just picking up your daily delivery from UPS. But that's another story. She knows I get to razz her about that stuff.
Yeah, I'm with your wife though. I get it.
I know. Well, the truth be told, most of it is stuff we really need. It just saved you a trip to the store, but
Yeah.
I'm sure there's some things that sneak through. But so let's say someone knocked on my door, and let's pretend I answered it and said, "Hey, I'm your long lost rich uncle, and I'm going to give you, $15,000 gift this year because I won the lotto." For me, I get $15,000, but that's not taxable. It's a gift. So there's a difference between, now if I said, you know what, I'm taking $15,000 out of my retirement account, that's taxable. So the same $15,000 hits my account, but it's how it hits it. That's understanding the tax burden or benefit of those decisions. So those are the 3 laws of teaching tax flow, and then everything else falls into line with that.
Thank you, Chris. So you've really outlined actually the basics of what everybody wants to do the right thing. Everyone wants to make a lot of money, obviously, do really well in life, save for retirement, take care of your taxes, do all of that. That's given. But sometimes it feels like it's a huge burden. And so I'm going to bring you to another question.
Good.
Because the world has changed so much, especially since COVID, I would say. A lot of people work from home, and a lot of new businesses have been created, work from home businesses. So they might start off, perhaps, maybe they have a job and this is a side hustle, or they've decided to jump in with both feet because they have enough money to do it. But now, obviously, as you start a business, I'm assuming, I can't speak for everybody, but it would seem to me some businesses start taking losses in the beginning. But you have a whole year that, as I understand it, you're able to talk about that business for the year. If that's not correct, certainly correct me. So let's say you've got a business, and is that a way to help with your tax business? Could you shed a little light of that? And then I have a second backup question with that.
Oh, sure. So yeah, ultimately, at least in the States, what we're talking about is, it is very common for a business to have a loss in the first year. And
Yes.
that loss from a business can offset some of your other income on your tax return. It gets all kind of mushed together on your tax return. In the States, there are different types of business entities. There's S corporations, LLCs, C corporations. But let's pretend someone's just self-employed.
Sure.
They just start doing, and they start a business and they have a loss. Well, if you're in business, and as long as the activity is not considered a hobby, right? Because hobbies are taxed differently than businesses. So you might say,
Okay.
well, how is something a hobby versus a business? So in general, if there are a lot of rules within the IRS with hobby loss versus business, but in general, if you have a motive of making a profit, if you're showing that you're acting this as a business, if this is, you know what, my son likes collecting baseball cards, which he does, one of my youngest,
Sure.
and I'm going to buy a bunch of baseball cards and pretend that I'm in business of baseball, and I never sell anything, and I write off all these cards. That's not a business, right? Because I don't have a maybe I don't have a Shopify store. I don't have I'm not acting like a business. My motive isn't profit. My motive is let's screw around with my son and get some baseball cards. So as long as you have a profit motive, then yeah, it's very common that you would have losses from a business, especially the first year. And it could happen for a couple of years, and then as you build it, and those losses could offset your other income. So let's say you have someone that, let's say one spouse is an employee somewhere and makes a good wage. The other spouse kind of got burnt out. Let's say they're staying at home with the kids quite a bit, but they also want to start a business, and they are trying to make it and make it profitable.
Mhm.
And then they would be able to take those losses and offset the W-2 wages. But you wouldn't want to, you don't want to have a business loss just to have a deduction, because ultimately, if you lost $10,000 in your business, you might see a $2,500 tax benefit, but you still lost $10,000. So
Yes.
cash flow versus tax flow, you're still minus $7,500. If that makes sense.
I like that, Chris. And I think that because a lot of people I think are a little bit confused. If I start a
Mhm.
business, does that help me with taxes and that offsets things? And we hear all of these big words, but
Right.
honestly, when it comes right down to it, you're losing money if you're not making money, right? And then
Correct.
the next size is, so my next thought is in United States, I know it's a little bit different. We have GHT and HST here in Canada. And so you have to register a business, you have to file taxes. If you're
Mhm.
making money, you can make up to so much before it's an actual income, and you have all of these rules and regulations.
Right.
If let's say you wanted, and I'm just going to be very, very small, just for
Yeah.
fun. Let's say I wanted to start baking cookies and sell
Mhm.
cookies. I'm just going small just for the
Mhm.
point. Okay.
Yeah.
If let's say I start making them, do I start right away with calling the government, letting them know I'm baking cookies out of my
Mhm.
house? Or can I wait a little bit? You may or may not know, and certainly you can qualify that. I'm just
Right.
wondering, and same as the states, if I start baking cookies, do I have to register?
Mhm. Right. So in general, so if you start baking cookies out of your home,
Yeah.
let's say here in the state of Tennessee where I'm located, if you're going to sell them in a retail environment,
Mhm.
then what you should do is you would have to file for a sales tax license, because you would have to collect. Let's say you're just going to a farmer's market
Sure.
and you're collecting, and you would have to pay sales tax on those cookies. You
Yeah.
don't have that you sold. You don't have to register with the federal government, because you could just be Teresa's Cookies. It could just, you don't even have to have a business name. Now, if it grows, you might want to form an LLC or a corporation, or that sort of stuff, especially if you really grow and you start hiring employees. But no, you could just start doing something. Now, cookies are a little different because you've got sales tax. But um, let's say you're a therapist and you
Sure.
decide, you know what? I work at a hospital, but I want to help people out on Zoom, on telehealth. I'm going to start seeing people. Private
Sure.
pay. You don't have to, you might want to register yourself. There could, depending on, I mean, that might not be the best example, because you're going to need to have a license probably if you're in a professional
Absolutely.
service. Um, but yeah, you're just going to report your income and losses. You don't have to be an LLC. You don't have to, you know, uh, collect sales tax, because on services there's no sales tax. But a lot of
Right.
it is dependent on where you live also. So,
I agree with that, Chris.
yeah.
And again, we're qualifying with each individual is different, but I would just sort of saying as a generality, I mean,
Yeah.
everybody should look anyway into their government papers, and I understand that, and depending on where you
Yeah.
live. But thank you for that, because I do hear a lot of small business owners starting out, especially now. Another one we're talking about podcasts. A lot of people are doing
Mhm.
podcasts. Some are getting money, some are not being monetized. Do you
Right.
have to have a do you have to have a number for that? I don't
Mhm.
know. So that's something
No,
that
right.
if you start making money, do you have to give your social insurance number out? Oh, I guess you called it something else in the
Yeah.
States, right?
Yep, social security number.
Thank you.
So yeah, you could start a podcast. Like I'm here in my home office.
Yeah,
We
me too.
finished it up about a year ago. This is exclusively just for work and doing our podcasts here, and working with private clients and that
Yeah.
sort of stuff. And so I'm not. I already had an established business, so but if let's say I was just starting from scratch, no, you don't have to. You can operate under your social security number,
Sure.
and then you would, let's say you did have a sponsor that paid you, they would probably request your social security number, and they would issue you a what's called a 1099 here, in the States, and say, hey, I paid this person this amount of money. But ultimately, yeah, you're not required to register,
Mm.
your business here. If you're a podcaster, you could just earn the money. Now you would be required to report that income
Yes.
on your tax return.
Yes.
But then you're also allowed any ordinary and necessary, that's what the IRS says here in the States, ordinary and necessary for your line of business expenditures. So if you went and bought these nice microphones like we have, if you've got computer equipment that you're using for work purposes, if you have a subscription to a professional subscription to Zoom, like I think we both have, or Riverside, which is a podcasting online studio. Um, let's say you took a course so you could learn maybe some of the technology, or let's say you pay a third party producer that kind of puts this out, or a social media manager. Those are all expenses that you can offset your earnings from the podcast. So
Thank you.
so yeah, so that those are things. So as long in the States, as long as it's an ordinary and necessary business expense. And then we look at things, I know you mentioned small businesses, and a lot of people work from home now, especially after the pandemic. So in the States, you are allowed to take a home office deduction. There's two conditions. The area has to be regular and exclusive use. It doesn't have to be an entire room. In fact, there's people that have podcasts, and you might chuckle, but that operated out of a closet. They emptied out one of their closets,
Wow.
and and they don't have clothes in there. They don't have, it's really their podcast area.
Yeah.
And in that's regular use and exclude and regular. So the regular course of business. Now they might go meet someone for coffee, they might go network,
Sure.
but the regular place of business, their primary place of business is that area of their home, and then it has to be exclusive use. So let's say you're baking cookies. That was a great example. That one gets tricky, right? Because yes, your regular area is the kitchen for your cookies. However, you probably, if you're making cookies, I bet you're going to make some other goodies for your family or maybe yourself. So you're not getting exclusive use. Now, if you grew, or let's say, and you rented out a kitchen somewhere else, or let's say you had a garage or an area in your house that you say, you know what, I'm going to dedicate that to store the inventory, or some of my baked cookies here. Or let's say you had to buy special equipment. A lot of times people that make craft beer or wine or something out of their house might have that area of their house. So in the States, it's regular and exclusive use to be able to take the home office deduction. And I would say tons of taxpayers take it. I encourage people to take it if they're eligible for it.
Awesome. That's fantastic, Chris. Thank you. I thought there's so many new businesses and so forth. I thought that might be worth touching base. And boy, you did a great job. Thank you, Chris. I
Oh,
really appreciate that.
oh,
So,
my pleasure.
yeah, absolutely. So let's go back to personal finances. Now we're coming up to tax time and
Mm-hmm.
personal planning. And what advice would you give people today to start planning long term? Let's talk about that. So now we've got well, in Canada we're starting our year. You told me your kind of year end in the States is December, and please correct me if I'm wrong.
Yep,
And
December 31.
you're coming up to April, so are we for our taxes for personal.
Mhm. Right. So for in the States, yep, your December 31st is the
Yeah,
year end for almost all taxpayers.
yeah.
That personal tax return is due April 15th. However, you can get a 6-month extension pretty easily. You just file
That
that
I
time.
didn't know.
Yeah, and I would say the majority of our private CPA firm clients or private clients do a tax. We do file tax extensions because they have a lot going on. They might own several businesses, and there's just a lot of record keeping to keep track of. They might be waiting for documents from other investments that they have. So we do need that extra time.
Oh, very good.
Now, you do owe the tax by April 15th, though, or you will be penalized. So yeah, if someone's just kind of getting it together, I think this is a wonderful time to start thinking about if you haven't yet, start thinking about your finances, because your tax return is a great first step as far as, okay, here's where we were at last year. And to me, the first step would be to build a budget, look at look at the money that's coming in,
Mhm.
look at the money that's going out on a monthly basis or maybe quarterly basis.
Okay.
And think about, okay, where am I at right now? And do I have a surplus and what to do with that? And then build a balance sheet for yourself. A balance sheet is just a list of all your assets and all your liabilities or money, things that you own, things that you owe. And then your equity is the difference, or you could have negative equity. So let's say you've kind of run into trouble. So let's say you just got out of college, you don't really have tons of money, you've got a really good income, but you might have $70,000 of student loan debt. Very common. So your balance sheet looks like I have $1,000 in the bank, I've
Yeah.
got 70,000 of debt, and I'm a minus $69,000 of equity. Okay, it's a starting point. And then you start thinking, all right, well, out of the excess money that I have, how much should I use to pay down my student loan debt? Or what are my other life goals? You want your financial goals to mirror your life goals. Do I want to save for a house? Am I thinking about relocating in the next couple of years? So it's better for me to rent right now. Do I want to start putting money away into retirement? There's so many. Let's say you're saving for a wedding. Let's say you like to, hey, I'm young right now and I want to save money, but you know what? I'm going to take advantage of this time to travel a little bit. And I know that might be not, but so budget for it so you can feel good about that decision and you're not feeling like, oh gosh, should I be doing this? Should
Yeah.
I not be doing this? So yeah. So I would say the step one, create a budget. Step two, create a balance sheet. And they both go hand in hand. And then it's easier to start your balance. We talk about changing things like it's easier to turn a motorcycle around than an 18-wheeler. So believe it or not, someone that's super young and might say, you know what, I don't have much money and it's not important for me to do any type of planning. No, actually it is. And it's easier when you're young because you don't have lots of assets. I'm already like, oh, I've got this retirement account from this old job. And oh, my wife's grandmother gave her this stock. And oh, we've got this for the kids. And we have all these bills coming out. So we talk in our family and we talk a lot about habit, practice makes habits, right? Practice doesn't make perfect. So get in the practice of doing an annual, balance sheet, maybe just once a year, maybe twice a year, and then have your budget, your income coming in and your money going out. And that's going to
Sure.
tell you the tale of where you're at and where you want to be.
That is great advice. Chris, I think there's a lot of people afraid to look at it. They're just like, oh, I don't know if I want to do that. I'm just going to keep working
Oh,
and hope it all works out. And I agree with you. Just looking at it and saying, okay, here's where I'm starting. Let's look
mhm.
at the long term. If I do this little bit, I can get myself to a point where I'm doing really well. But I think if you shy away from that, that's where you probably run into a little bit of issues because you're not really budgeting, right?
Absolutely. That, and that's it's easier to put your head in the sand,
Yeah.
to be an ostrich. The hardest thing to do, people talk about the gym, right?
Mhm.
Getting in shape, getting in a habit. What's the hardest thing to do? Getting up and putting your gym clothes on and driving to the gym. That's the hardest. So the hardest thing is doing it that first time. But guess what? If you're in a tough place right now, a place that you don't like to be in, okay, it only goes up from here, right? Um, so start here, and now you're going to see the rapid improvement. You know, it's just like, oh gosh, I don't want to step on a scale. I've been terrible during the holidays, and guess what? You are. It is what it is. Just try, do it, start there, and move forward. And the good thing is, some people are very self-accountable. Some people might want to find an accountability partner. And hey, I have a friend. You know, let's do this together. Let's look at, but also enjoy life too. I've got some people I've run into that they literally count all their pennies, and they're like, I'm not going to Starbucks because I'm going to go to this here. And again, there's nothing wrong with that, but you also have to enjoy life. So give yourself a budget for fun too.
Excellent. And I have heard that too, and that it just put a little bit, allocate a little bit, because now, although you're working hard, you're rewarding yourself as you go, and you're kind of giving yourself a little pat on the back saying, okay, I'll have that latte today, or, I'll go out with my wife and enjoy time, or spouse, partner, whatever, you're out there having a good time for a night. It's
Yeah.
okay once in a while, right?
Absolutely.
Yeah.
And if you get in the habit of not keeping track of it, and look, I've been a financial professional for over 20 years. I've gotten into seasons where I've kind of slacked, where
Ooh,
I've thought like, gosh, we spent too much money here. We're kind of not keeping track of things. Or my
yeah,
wife and I we're very, we have busy lives, and our kids are doing music and travel sports. And I'm looking back, I'm like, huh, we went out to eat like 4 nights last week.
right.
That's not good. Let's plan a little better. That's a lot of money. Let's
Yeah.
maybe we write down, so we've gotten into times where we start writing down what we're going to have for dinner the week before, and it might deviate, but it's okay. Hey, we're going to go out to dinner one night a week, but we're going to try to eat in the rest of the nights or whatever. But because without, but it can happen to everybody. It's
Oh,
like
oh, absolutely.
the mechanic that never changes their oil.
Yeah, exactly. Exactly. The plumber whose pipes are leaking. I totally get that, right?
Mhm.
Chris, you've
Yes.
been amazing today. I really, boy, our time is just flying by. I want to talk about your podcast, because you do have a podcast. So tell us what the title is. I have down here your
Sure.
podcast, but tell us the
Absolutely.
channel, and we'll make sure that it's posted here too.
Absolutely. So we're teaching tax flow,
Okay.
and we are on pretty much all the major podcast, I don't know, channels, I guess, right? iTunes, we're on Transistor, we're on all of Google Play, all of them. But if you just look at, Google Teaching Tax Flow, you're going to find us. We
Okay.
just launched. So for our 100th episode, which was last October, we started recording them too on YouTube. So now any episode after, where I think we're on an episode about 120 or so, you can listen to all of them. You can watch them on YouTube, or you can just listen to them on all of your favorite podcast, uh, you know, um, be it Spotify.
Yeah.
I'd say, golly, probably 98% of people listen to them instead of watch them. And I'd say about 1/3 of our podcasts, we have a guest. I have an amazing co-host, and we just tackle different topics. And we started a private Facebook group called Defeating Taxes. If you just go to defeatingtaxes.com, you can just join it. And that's where we get a lot of our show ideas. So like home office was a show.
Good.
Starting a business was a show. Everything we talked about actually has been a
Oh,
show so
wonderful.
far.
Oh,
So
good to
yeah,
know. And you know what? You have been terrific. Chris, will you come back and talk to me again and talk to our guests?
I'd love to.
Oh, you've been wonderful.
Yeah.
So first, this is Chris Picciurro, and you're
Mhm.
with, and I've got right in behind you, teaching tax flow. So that's wonderful. And you've got your shirt on there, all the paraphernalia, so you can't miss them on there. I'll make sure
Exactly.
everything is in here so that when people go to our channel, they'll be able to see it. Go over to Chris and subscribe to his podcast and his show. That helps support content. And certainly, please subscribe to my show as well. Chris, thank you so much for your time, and we're definitely going to have you back. Everyone, file your taxes. That's the most important, right, Chris?
Absolutely.
Most
Make sure
important.
that, make sure that you're getting the best result possible. And that best result possible could be if you do it, file on your own or work with a tax professional. Yes, don't delay.
Number one, make sure you file. So, everyone, thank you so much. My name is Teresa from Success Diaries with Teresa Aker. I hope you're all having a great day. I look forward to talking to you all very soon. Thank you. Bye bye.